it is a matter of truth that the 1st February 24 budget that will be announced will just be a vote on account. By 2047, India should reach a $30 trillion economy size. For the growing population, growing youth, young, who need more skills, who need to upgrade their skills, you need the newer areas also to get priority.
Welcome to India Market Open. Good morning, Tamanna. Good morning, Niraj. No bigger day than this. It is D-Day, finally.
Finally indeed. But you know, it's a confluence of so many things, yes, because coincidentally we've had the Fed meet come out. Not as eventful, thankfully, but post-Fed, ahead of budget, which may not turn out to be as interim as people may think it to be. Never mind what PM Modi said yesterday, of course, and the fact that it's a morning which is so news heavy that you could have almost ignored that it's a budget day and still had a very pacey action-packed day.
I reckon budget will still take top of mind, but you're right.
As it should.
You're right, Niraj, Samina, morning to everyone watching. Fed outcome, we're going to cover that. 197 communications. What's happening to Paytm? We'll be breaking that down for you. It's the Nifty expiry as well, and a whole host of data that is going to come out.
And it's still earnings as well.
Earnings, of course, in the background, in the backdrop is going on. So all of that happening, all of that here on our special coverage on NDTV Profit. So let's begin and very quickly take you through first what has happened with the Fed. Now, global markets got a bit of, I would say, cold water poured on all their hopes of a March cut. So the Federal Reserve, as expected, did not do anything to the rates. That was priced in, that was largely expected, but the whole question was, is there going to be a clear indication of when the rate cut begins? And over there it was made very clear by Jerome Powell, the Fed chair, that March is not the time when that will happen. He said, I find it very unlikely that, the committee members find it very unlikely that there will be a rate cut in March. So that saw then U.S. stocks close down lower, and not massively, but the Dow down nearly 300 points for sure. There's a lot of nuance, though, in what Jerome Powell has said, and that's important as well. Because while he made it clear that there is going to be no rate cut in March, he did say that he sees a rate cut taking place at some point this year. He also said that he believes interest rates have peaked in this tightening cycle. So both of those positive things, and you could see that reflect, I would say, in the bond markets. The U.S. 10-year, though, had already dipped below the 4% mark before the Fed statement came out, but it managed to persist and stay there. So a good view there on the U.S. 10-year. Quickly, let's check what Asia has done as well, because that will give us a good idea of what the response has been. I would say, all in all, Fed not too negative at the end of it. Everything priced in largely, and you're seeing that play out as well. Asia mixed. So maybe that then, Niraj, Samina, doesn't become the big factor this morning. There's a lot more cooking back home.
Yeah, most certainly. In fact, Kospi is well and truly in the green, in addition to the Chinese markets looking iffy. So that's the very interesting piece. And I think we'll get in Jeff Dennis in moments from now to try and understand what he thought, because back in his UBS days, he used to track EMs so closely. And therefore, his view on what this means for EMs like India could also be very, very interesting, considering that we have a budget coming up as well. So, and the budget commentary would be important. So let's try and get in Jeff Dennis in just moments from now. But one is that, and two, that thankfully, Jerome Powell was not dismissive of the possibility of a rate cut. Thankfully, without timelines, he wouldn't anyways let that slip. But it didn't seem like from the commentary that it's negated and relegated to the back end of the year. It's still keeping the markets guessing, which is the important thing.
Niraj, what might have made the markets a little disappointed is I think everybody out was believing it's a Goldilocks era. It's for risk assets, bonds. The bond king, of course, stuck to his call of a recession this year, and that was quoted by Jeffrey Gondlach. I think he's the Double Line Capital CEO. Very, very bearish at this stage. And he also said that what investors may want to start doing in the US is pull out money from the US, sit on cash, and maybe look at emerging markets. So while whatever is happening in the US potentially is negative emerging markets or negative risky assets, the flip of it is the US has run up already so much more.
Yeah.
So there is an opportunity, but...
No, and frankly, Samina, I mean, Jeff Gundlach says something you got to hear, right?
Yeah.
I mean, he's as much a force to reckon with as any. The only thing is he's kind of held this view now for the last 6 months. But the ring in the tone of looking at EMs, one more voice added to the chorus, and which is also very, very needed.
Just one last line, and I hope we have Jeff Dennis up now any second. One last line that I would add from the Powell takeaway, and then we'll be done with that leg of this morning, is that he says don't expect consistent rate cuts after the first one. It's not going to be a steady stream, which is also what the markets had priced in. So we'll have to wait and see all of this and how it turns up.
Yeah.
But bonds, a lot happening domestically as well.
I think just before that, I think bonds also were all over the place yesterday. So we saw a sharp fall. There was a little bit of recovery in day trading, but finally went home with quite a cut on the US bond yield, of course. So those are things you want to watch out for. Very critical because this has been an event that has been driving global markets, including emerging market equities like India over the last couple of months. Anticipation, hopes of this being a Goldilocks era is what's kept equity markets and risk assets on top of things. We're still waiting on Jeff Lewis, I believe.
Let's listen into what Powell said.
Let's
meanwhile listen into what Powell said on rate cut expectations.
It's not that we don't have any confidence. We have growing confidence, but not to the point where we feel like it's a highly consequential decision to start the process of dialing back on restriction, and we want to get that right. And we feel like the strong economy, strong labor market, inflation coming down, it gives us the ability to do that. We think that's the best way we can serve the public, because ultimately we've made a lot of progress on inflation. We just want to make sure that we do get the job done in a sustainable way. That's how we're thinking about it.
So that was Powell, and that's a story that we'll see playing out for the next few days. But I think we should quickly move to the trade setup as well before we get to the big story this morning of 197. And that's the big question here, Niraj. In a market which has so many factors to think about, do you look at stock-specific earnings? Do you look at the sectors that are expecting capex flow? Or do you look at 197?
Yeah, no, so definitely look at 197. And let's move on to India now. Or do we have Jeff Dennis? Okay, so let's move on. We'll get you the Jeff Dennis conversation on our social media handles later on. Let's move on to India now. So, two things. One, the markets in the last 48 hours have done unexpected moves. Down in a big way the previous day, up about 1% when nobody quite anticipated it in yesterday's session. And while banks obviously have to play the pivotal role, yesterday we saw other sectors come to the fore. It's not normal for you to see autos and pharma moving together. So very, very broad-based, the broader end of the spectrum, the market breadth was very strong. So I think in some sense, maybe call it because of what's happened in Bihar, maybe call it in factor of policy continuing now being rewarded quite adequately, and therefore the pre-budget or the pre-FOMC fears being shrugged off. But I think today, this morning, maybe on tenterhooks before the budget comes out, maybe a small bit of a pullback because of what the global markets are doing, but largely stable. That would probably be the verdict. I don't think too many people will be taking trades any which ways ahead of what Nirmala Sitharaman says, because her commentary on the glide path as well as what is it that they do on capex would probably take center stage. And if they managed both of those things well, predominantly, then I think we are in fine fettle.
Just a quick check on implied gift Nifty. We haven't done that. So let's take a look at what we are expecting or anticipating in terms of today's market activity. Flat start, so no surprises there for guessing. It is going to be a sideways sort of opening. We are back to levels of what we were towards the end of last year. So again, while we did recover, like Niraj said, in yesterday's day of trade, Jan has been a difficult month for the markets. It's been lacking direction. It's been lacking foreign outflows. In fact, if I have to put just put perspective, India saw the largest outflows from foreigners across as compared to other Asian markets in the month of Jan. So there'll be lots of moving parts, but the big story, like we've reiterated, is going to be budget. It is an interim budget, vote of account. You will have the full-fledged budget out in a few months from now, but still lots and lots of focus on this event. We've got Vishy. There's a lot of focus on a stock this morning. Vishy, it's a very news-heavy morning, or last evening was. 197 communication. I think it's going to get a gap down. The RBI has struck hard.
Yeah, terrible evening for us as well as Paytm. But essentially what the RBI has done is that it's blocked any fresh deposits or top-up transactions on Paytm Payments Bank accounts from the 29th of February. That's essentially the gist of it all, right? So customers who currently have balances in those accounts, they can continue to spend money, they can continue to withdraw their funds, all of that is allowed, but fresh deposits, that's a problem.
And they can continue to top up until the 29th of
February. Yeah, they can do it till the 29th of February.
Nobody's going to do it if there's no continuity.
Yeah, there is absolutely no point doing it if there's a definitive 1 month sort of a deadline. What we picked up from our sources just this morning is that this is in preparation for a cancellation of license of the Paytm Payments Bank. Now, payments banks came up about 10 years ago as a way to bring in differentiated banking, do better financial inclusion and all of that. But now the RBI is looking at a potential revocation of license. Now, of course, 29 days still exist, and the bank can go to the RBI for remedial measures. All of those options are available. Paytm itself has said last night that they're moving a lot of their payments businesses to other banks because the payments bank is under restrictions. So we will shift our business elsewhere. Only problem is then they don't get a share of the earnings from those payments. It goes to whoever is providing those services. So that becomes an issue. But at this point in time, what we understand is that the RBI may have considered a sort of a staggered move, primarily because you don't want the ecosystem to get too disbalanced. So you want to take it slow and see what the impact is, and then maybe take a final action.
I have a very basic question, Vishy, and of course, big exclusive there. I don't want it to get lost in this conversation that this is just step one to cancelling the license of the payments bank. So that's going to be big negative in any case for 197. What have they done wrong? So, because that's not very clear in the RBI's language.
It's not.
They say supervisory issues, etc., etc. But if you can explain, what has 197 or what has this payments bank done wrong?
The genesis of this problem comes from March 2022. That's a little over 20 odd months. Yeah, 22 months ago, the RBI found that there were issues with how KYC was being done and how data storage was being done at the payments bank. So essentially, the payments bank, being a RBI-regulated entity, is supposed to have a bit of a Chinese wall with the parent. The RBI did find that the Chinese wall was not being maintained, the integrity of that was not being maintained through and throughout. Now, this is all based on what sources are telling us. The company itself, Paytm, as well as the payments bank, both have completely denied these pointers. But what we understand from sources is that these were issues that the RBI found. The RBI in 2022 stopped onboarding of new customers and said, go ahead and fix these problems, and then we'll talk about bringing new customers in. Nearly 2 years later, the RBI has conducted its system audit. It's conducted an external verification of that system audit as well. So it's not like the RBI is saying it out of their own free will. This is an external entity which is saying that these problems are real. And the RBI is saying if 22 months you can't fix it, well, now you need to face the music. That's what's happening here.
So, Vishy, let's put this in perspective with numbers. The expectation, or there are notes which the last night release said that even without this exclusive that we've broken, it's a cost of 300 to 500 crores on the EBITDA level, which is circa 30% of FY25 adjusted EBITDA.
Correct.
So that's the cost that is incurred.
Correct.
And we're only talking about the numbers cost. What happens to customer sentiment, what happens to other partners, whether staying or no, that is still not been and maybe cannot be factored in.
Yeah.
So this is, aside of the fact that Paytm will go out and try and resolve, on an immediate basis, there is a large hit, not just to sentiment, but to actual costs moving up for Paytm.
That's right. So payments as a business is very big for Paytm. I mean, it's there in the name. So you're going to get a hit on that because there's going to be a reputational hit, because there's going to be a sentimental hit on the entity. If the RBI is coming down hard on a Paytm entity, then partners who work with Paytm, and what Paytm is saying that we will move to third-party banks for payments businesses, all of them will sort of rethink their deals with Paytm. They will probably want to be safe in such a situation. So that is going to be an issue. Timing is also a problem because just last month, RBI after the RBI's unsecured lending guidelines, Paytm, which was a big player in the sub 50,000 market and the BNPL market, had to cut down on businesses. So there again, they have said that there's going to be a business impact. So lending, which was their big profit center, and then payments, which was their big operational center, both are being hit at this point in time.
Also, Vishy, so just to understand this going ahead from the 29th of Feb, your UPI app still exists.
Yes.
But they don't make any money off it because it's literally like having an Access HDFC to Kotak banking app, and that's pretty much the business that will stay. If we have to try and break this down, if they're not going to make any money, Niraj has already talked about the hit on EBITDA, what happens to the parent company now?
That's what the parent company needs to figure out. Now, the parent company on its part has said that we will move to other banks, we will ensure that our services are restored. On the side, the Payments Bank itself is working with the RBI on compliance. All of those things are being worked out, but we will only get a clearer picture at the end of this month. So when the March quarter results roll in, that's when you need to watch out.
Just one last thing for viewers, the FASTag bit. We need to mention because Paytm has a big share there, 17%. Right. So if your FASTag balance is done, can you reload it? Are you in trouble?
You can reload it till the 29th
of Feb. Okay. And you can use it for the next couple of months.
If you reload it before 29th of February,
but why would anyone do that, right?
But the money is not in danger, right?
Money is not in danger.
For users, money is not in danger.
Safe. No problem.
Perfect.
So that was important. Thank you so much, Vishy, for coming in and giving us all of that, perspective and the exclusive. And the exclusive. But there's a lot of stocks to watch.
Yeah, there are lots of earnings reaction as well. So stellar set of numbers. So while, just a quick one, 197, we could bet on this one. The stock is going to see a massive gap down. The street is concerned. Brokerages as well are very concerned about what this is going to do to the stock. The company will open with a massive gap down and we'll be watching out for that. Beyond that, few earnings reaction. We've got Shree Cement. Exceptionally good set of earnings being posted by Shree Cement. Revenues are up over 20% at 5,223 crores. EBITDA is up nearly 74% to come in at 1,264 crores. Margins have seen a huge expansion of about 729 basis points to come in at 24.2%, and net profit has also has come in at a massive jump, 700 odd crores versus 281 crores that the bank had posted. Company, of course, is on record growth path. Expansion plans are on board. They've also indicated that the strong volume growth is on path. And I know Niraj is looking at me. Shree Cement is a stock that we've talked about. Strong reaction. Why don't you come in and tell us your thoughts on it?
No, I don't have thoughts. Just two things. One, the City Note said that the discount between Ultratech and Shree, which is spoken about, has narrowed a bit. And therefore, there is this income tax angle to Shree. So that is to be watched out for. But Samina, just carrying with your blowout numbers and just coupling that up with Ambuja, simply because while Ambuja went off yesterday, down yesterday, in the guidance that they've said that they will go to EBITDA per ton of 1,400 very shortly. Cities raised the price target today as well. So cement remains very strong. Now, I was just joining your enthusiasm, I must say.
And the budget.
Exactly.
So there is so much working with Shree Cement this morning.
Or cement at large.
If you were making a budget list, cement would be on top of it.
So you tie that in with strong earnings, brokerage upgrades. Even the management, I think, after a very long time is sounding so confident. And I think that's what you're really going to be taking heart from. They've said that they're executing a comprehensive performance improvement plan and are experiencing a positive impact. Strong volume growth along with building premium products through accelerated channel expansion and softening of fuel prices is what's actually helped Shree Cement. So watch out for this one. It will see a good start in today's day of trade. Also, like you said, ahead of budget, counters like Shree Cement are usually quite active in trade. Well, let's move on to the other one that also could be active in trade for more reasons than one. One being earnings, the other being budget, is IRB Infra. Again, the stock has been very active. So if you take a look at what it's done in the last 1 week of trade, we've seen a very sharp up move on IRB Infra. The reason Reason being, it made headlines on Monday as the company's private infrastructure investment trust, which is its InvIT, won an arbitration claim against the National Highways Authorities of India. They've been compensated 720 crore rupees. So it's a huge win coming in for RB Infra, and that explained the big sharp move that we saw on the stock. Today we see the stock in focus on back of earnings. That, of course, is the 1 month performance of the counter. In terms of earnings, revenues are up 30% to come in 1968 crores. EBITDA is up nearly 17% at 870 crores. Margins, though, are down quite sharply. So could be viewed as a mixed bag because margins are lower. What we understand is the input cost has actually risen quite sharply, and that's what's impacted RB Infra. In terms of top line, numbers look good, numbers look phenomenal. It is a little bit of pressure coming in from input costs that has impacted its margin picture. And on back of that, net profit as well. Net profit actually has come in about 30% higher at 188 crores. So all in all, I'd imagine IRB and Shree Cement should get a thumbs up in early trade this morning. 197, we've said it enough number of times, we'll be getting a thumbs down. But more earnings on the radar, Tamanna?
Yes, we can't discount the fact that earnings have been the big driver in these markets for the last few weeks, as they should be. But I'm going to start with a non-earnings sector that you should watch out for, and that is autos. I don't think too much of a budget play there. Maybe if there is a push for EVs, so some may react. But yes, you're going to have sales numbers here, and passenger vehicle numbers are expected to grow upwards of 20% year on year. Two-wheelers will be relatively sluggish, but an uptick is continuing. So you could continue to see single-digit growth. There are a couple of notes out in the expectations, and Bajaj Auto may not have as good a year-on-year growth as its peers. So that is one list that you should keep on your radar. In terms of numbers, Godrej Consumer Products and relatively looking at what's happening in the FMCG space, good numbers. It's a beat on EBITDA, beat on net profit, beat on margins. Those numbers will be on your screen of what the revenue and EBITDA was. But what is really working is a change in strategy. So they've, for example, they've put out one of their cheapest liquid detergents in the south. That is working. They're anti-repellent in the form of agarbattis. All these strategic moves and the new management strategies seem to be falling in place. I would keep that on my list. Westlife is another one. Now, this is a disappointing set of numbers, no two ways about it. It's missed estimates on most counts. Your same-store growth has slid to minus 9%. Revenues are down below estimates. EBITDA is down 10%. Margins are also down about 138 bips, as are net profit. So a couple of things have happened here. Westlab has a lot of stores in Chennai, in the southern part of the country where there were floods. So a flood hit has taken place. They need to rework, I suppose, some of their strategies and their lower cost menu. So it'd be interesting to hear what the management has said. It's also talking a bit about your discretionary spend hit. So a bit of a stuck or a difficult place that Westlife is, and we saw that in Jubilant as well. Yeah. So those are some that I would watch out for.
Exactly, Jubilant and Westlife, both showing those chinks in the armor.
Trend there,
Yeah, very likely. But just 9% SSSG growth downtick is terrible. Now, two or three other ones, and I'm sure we have more, but Dixon stands out. Revenues, 100% uptick. At about 4818 crores, so higher than the Bloomberg estimate. The margins came off, but remember, but relative to estimates, they were still higher. And keep in mind, for Dixon, margins may vary a little bit here and there, but largely managed at 3.5% to 4.5% band. The margins don't go above that and don't largely come below that. PAT, therefore, a healthy 87% growth. You could argue lower than 103 crores estimate, but largely in line. The point is, management refrained from providing revenue guidance, so that was one thing. And they've said that they are looking to vertically integrate with PCBA for industrial products, which can aid margins. Now, let's wait and watch what happens. This whole mobile components duty piece as well impacted Dixon yesterday. Let's see if there is more in store today, so watch out for this. The one that impressed me a lot was Mankind Pharma, not because of the reported numbers. So I'll take you through that. Revenues up 24%, EBITDA up 38%, which is fine. Margins, 23.26 versus 20.9. The estimates were 24.9. So on margins, they've actually been lower, but on PAT, they've been higher. But two things that stood out on Mankind Pharma. One, the export piece. Exports went up 118% YOY to 207 crores. This is big for Mankind because they've gone into it recently. And it's a free cash flow generating machine, it seems, because look at the balance sheet cash. It doubled since March 2023 to 2756 crores. So really strong show put up by Mankind Pharma. So watch out for that one. And then Ajanta, JSPL and Divgi, those stand out. Maybe we'll talk about them in detail. Tamanna or Samina might have details there. But Ajanta, margins expanded, PAT went up. JSPL, margins expanded meaningfully. And Divgi, it's a very expensive stock, recent listing, but it's won a 212 crore order. And it's important because it's coming from North American manufacturers of automotive transmissions, which is big market for Divgi. So therefore, you might see this stock react a bit.
Yeah, and I think Ajanta, those numbers were also fantastic. Margin expansion is mind-boggling. Every market of theirs has grown. EBITDA is up 85% YOY. So they've come in at 314 crores with a margin expansion of 1,000 bips at 28.4% for the quarter. So Ajanta could be blowing out in early trade. Smaller company, but worth a mention is Thomas Cook as well. The reason I mention this is because we've seen the excitement, and you saw this with Ayodhya a few weeks ago, and the push for tourism that we've seen all through last quarter. Again, could be an important talking point from a budget angle too. The stock will be in focus. Numbers reflect exactly what the industry has been excited about. A quick word on that, Thomas Cook has registered a 241% growth year on year to report a profit of 90 crores, driven largely by income. Revenue from operations have also grown 24% compared to the last fiscal. Another quick one, I did come across some of these reports on Indus Tower. Now, of course, we'll find out more as we go along the day. KKR and CPP are likely to sell 3,800 crores in the tower infrastructure company. Again, this one's been in focus for the last couple of months now. The stock is up 25% in the last 3 months. Took a big hit in trade yesterday. Could expect a block deal of sorts on Indus Towers. So watch out for that too.
Yeah, just on the margins piece, 3 stocks which stand out today aside of Shree. One is Ajanta, as Samina stated, blowout margins. JSPL, extremely strong margins.
As well.
And data patterns, by the way, guys, good numbers, good profit, but margins just 96 basis points higher, but at 43%. This is the highest margin in the last 7 quarters, and the margins have trended higher for each of those last 7. So data patterns seemingly doing something well. It's an expensive stock, but could be an interesting one to watch out today.
Yep, absolutely. But these are the stocks in news, so to speak, which have an immediate impact. Post 12 or so, the focus will move to impact of companies based on budget announcements. We know it's a vote on account, but directionally, there will be a clear push on whether the government is continuing with its capex and in what direction. After the break, we're going to talk about the F&O markets, what to expect, but we're also going to be bringing you ahead in the show a list of sectors and the top stocks in those sectors that you should watch out for that are likely to be impacted by the budget. Stay tuned.
Welcome back. You're watching India Market Open. It's all eyes as we run down to the budget in a few hours. It is the day and the markets will be very closely watching out at the Finance Minister as she rules. Of course, how the year gone by has been, and of course talks about what lies ahead for India. Well, beyond that, the first few hours of the market will be driven by earnings and maybe sideways move as well. But Agam is standing by with more on that. Agam, yesterday's rally came pretty much out of nowhere. Wasn't very expected on the cards. We were expecting to remain volatile. But broad-based sectors across the board participated. What does that mean?
Yeah, so two big takeaways. The banking stocks are back in action. A lot of the strength on account of HDFC Bank, ICICI Bank and Axis Bank. And secondly, mid-cap and small-cap indices were going from strength to strength. But that has, in fact, also led to benchmarks moving higher. So the Nifty has come and seen, in fact, another 1% up move. But on the whole, we really haven't seen too much traction as far as your change in open interest goes in index futures. Why? Because I reckon to a certain extent, traders would want to wait before they take and, well, place bets as far as your futures are concerned. It's not very different for the Bank Nifty either. In fact, for the Bank Nifty, we've seen unwinding of positions to the tune of really 6%, even as the index moves higher by around 1.4%. And this move particularly, perhaps, was something that took a lot of traders out with surprise. And we were nearly at 4,600. Of course, we tested 46,000 and then we came off to a certain extent. Let's move on and talk about how things are stacking up as far as your option universe is concerned. It was at least based on the kind of cues that we're seeing in terms of change in open interest on the Nifty options, it's been fairly all over the place, to say the least. But Nifty at 2,700, 27,000, 28,000. That's where we're seeing a lot more traction in terms of calls as well as puts. Remember, this potentially doesn't necessarily mean that all these calls and puts have been written, because we are moving into a large event. And where does that keep the Nifty in terms of your open interest? Well, we're still looking at a 500-point range, which could in fact change because it continues to change on a day-to-day basis. But based on max OI, keep an eye on 22,000 on the higher end and 21,500 on the lower end. What is really interesting is that the budget also falls on the day when you have the Nifty weekly options expiry. So you can't really rule out any choppiness going into today's day of trade. Starting and coming down to stocks then, well, we do have a bout of longs for Dr. Reddy's, Max Financial and Coromandel International. A lot of your agri-chem stocks perhaps will be in focus today as well on account of the budget. And shorts in Pidilite and Cholamandalam Finance. In terms of stocks which saw short covering, a lot of that coming through for Exide Federal Bank, M&M Financial Services, PNB and AU Small Finance Bank. No prizes for guessing. The financial sector will also be in focus today, and that's the reason why we've seen a lot of traders take their bets off and they want to wait for the announcements in the budget coming through. All in all, we're certainly keeping an eye on the benchmarks, and we are expecting a little bit of choppiness to play out, especially given the budget coming through.
All right, thanks a lot for that, Agam. So clearly watching out for that as well. And, in about 8 minutes, we'll get our first set of guests coming in right on time, just 20 minutes before the pre-open session begins. And then we try and dwell deep into what to look at it from a market's perspective. But keep in mind, aside of the budget being so important at 11, the pre-open or before the budget starts, to just try and nail down some of these specific movers in the session is extremely important, which is why the first half an hour today, we've had an extended trade setup, guys, because just the quantum of news flow, Fed, budget, and the stocks in focus was just so high that it becomes very, very important to say that.
My point is that when there is so much uncertainty and so many factors, you would perhaps expect a bit, and that's what the implied open is showing you. Let's pull that up. You're seeing a muted start because people are waiting to see how things are panning off. And look at that implied open, even lower now. So there's going to be a bit of wait and watch to really see what's panning out. And as much as people have been saying that this is an interim budget, it's a vote on account, yes, technically it is. Technically, a pre-election, pre-general election budget, the government at that time has to just pretty much put out something to keep the finances running. But that's not what we have seen playing out, and that's something we have to remember. If you go back to 2019, that was when you had at least 2 big changes that were announced.
Right. So that's, of course, all that budget talk. But Agam, very quickly, 2 sectors, like we said, that led the way up. Yes, it was banks and autos, both having a phenomenal run. Autos, again, in focus this morning, beyond the budget. It's the auto sale numbers that will come rolling in as well. Anything in the auto pack that looks constructive at this stage? I mean, have you sort of picked up on anything that is eye-catching in that sense?
Yeah, so some very interesting moves coming in yesterday on Tata Motors and Maruti Suzuki, where, if I'm not mistaken, Tata Motors market cap has taken over Maruti Suzuki. And these are the 2 big names which are going to be in focus. I reckon that to a certain extent, the volumes numbers will be factored into the markets. I think it's going to be interesting to watch whether or not we can in fact have some announcements which may perhaps have an indirect implication on auto companies, and because on the back of that, we certainly will be keeping an eye on both these behemoth auto behemoths going into trade today. But we are, as we move in, let's get an expert view and an expert point of view as to how they would in fact navigate markets today, and not only just today but also through the course of the next few sessions. Well, we have Milan Vaishnav of Gemstone Research who's joining us on the show right now. Milan, good morning. Thanks for joining in. It's going to be an interesting day of trade, to say the least. How are you placing your bets as far as the benchmarks are concerned? If not on an intraday basis, then perhaps positionally?
Yeah, Agam, good morning, everyone. See, the reason is that I'm a little skeptical on markets today is that going strictly by the technical terms, what we have today is an vote on account, or rather an interim budget, which is more commonly referred to as. And generally speaking, there is no major announcements that should be expected. However, if we look at the history in 2019, this government had presented an interim budget or vote on account. And they had some important announcements, and this is precisely what the markets are expecting today. Now, that being said, there is immense volatility that we are seeing, and this is very much harmful for a retail trader, where the markets are down by 400 points, up by 400 points, down by 200, and then up by 200 points again. So I think the best method to approach this market for a retail trader is to very patiently wait until a directional trend emerges in the second half of the session, and then take a call rather than mindlessly participating in the very, very volatile move that can happen in the first half.
Okay. So Milan, based on that, what ideas do you have in terms of strategies and structures that you're employing in the markets today?
I will have a little conservative approach here. To begin with, I would suggest that one should stay away from the markets. There is no need to compulsively trade the index. There are rest of 199 trading days out of 200 where you can take a more informed and call based on more solid analysis. But still, if you have to trade today, I would go with a long straddle. I would buy 21,800 call and put for 8 fat. At 215 and 249, I'll be buying call and put of the same strike price, that is 21,800, and that would result in a net premium outgo of around 464 rupees, that is 23,200. Now that's a maximum loss that technically I can occur on this trend. The logic behind it is that the markets will stay volatile, but after that it will take a sharp move on either side, and that's where this strategy will come into play. This will have a break-even of 21,300 on the lower side and 22,294 on the higher side. Now, this is a limited loss and unlimited profit strategy, and the maximum loss can be around 23,200. However, I would add another layer of safety here that by 2 trading days, if clear trend doesn't emerge, then you should limit your losses by 10,000 rupees. If your loss is at 10,000, you must move out of this trade.
Okay. Milan, I believe you also have one more from the banking space, if I'm not mistaken. Can you tell us about that idea as well?
Yes. Now, despite the kind of reactions that we might see to the Fed commentary, which I don't personally read too much into that, but I have a bull call spread on SDFC Bank. The recent reaction to the numbers have given us an excellent opportunity to enter the stock on a positional basis because the long-term fundamentals remains absolutely intact. I expect the stock to test 1550 levels over the next couple of weeks time. So therefore, I would like to go with a call spread. I would buy 1470 call, 29th Fed expiry, and sell 1550 call for 29th Feb expiry. I will be paying a net premium of 25 rupees. That would be my maximum loss. That translates into absolute sum of 13,750. The maximum profit potential in this trade would be 30,223. However, this max loss of 13,750 can still be kept limited by keeping a stop loss of 1410 on the stock.
Okay, so that's a very interesting strategy on HDFC Bank, and remember that it